a financial powerhouse that's been quietly influencing the world, and there's a good chance you may not even know about them. We are talking about Blackrock, the financial giant that has risen from relative unknown status to become the biggest and most reliable manager of other people's money globally. Just to put things into perspective, the assets entrusted to Blackrock are mind-boggling. We're talking a jaw-dropping 6.3 trillion US dollars. In 2008, the government's bailout was much larger than disclosed. Blackrock, a major financial player led by Larry Fink, was chosen to assess and manage the crisis involving giants like Bear Stearns, AIG, Fannie Mae, and Freddie Mac. Remarkably, Blackrock secured these critical contracts without competitive bidding, raising concerns due to its significant ownership in the banks they were helping. Fast forward to 2020, the pandemic wreaked havoc on the markets. The Federal Reserve took an extraordinary step by purchasing corporate debt ETFs to rescue heavily indebted corporations. Surprisingly, they turned to Blackrock for this task, even though Blackrock held substantial stakes in these corporations. Notably, the Fed's portfolio included a whopping 794 companies, not just the top 10 holdings. Larry Fink, once the mastermind behind the post-bailout economy, was now steering the post-pandemic economy. However, despite Blackrock's colossal influence, Larry Fink remains largely unknown to the general public. Blackrock, led by Larry, has adeptly stayed out of the limelight. In 33 years, they have grown into the world's largest asset manager with over $9 trillion under management. Today, Blackrock serves a diverse clientele, including everyday people's retirement accounts, pension funds, sovereign wealth funds, central banks, college endowments, Fortune 500 companies, and individual investors. They also hold significant stakes in major publicly traded companies like Apple, Microsoft, Facebook, and leading banks. Larry Fink's strategic approach has allowed Blackrock to influence the financial world discreetly, making significant waves without seeking the spotlight. Blackrock manages an astounding $9 trillion in assets. To put it in perspective, the 300 largest pension funds globally hold just $6 trillion. Even Vanguard, a giant in mutual funds and ETFs, falls short with $7.1 trillion. When you combine BlackRock, Vanguard, and State Street, they command an astonishing $15 trillion, nearly 70% of the entire US GDP. It's a financial powerhouse of epic proportions, and the man behind it all, Larry Fink, has achieved this while staying relatively low profile. He's like the Wizard of Oz, orchestrating from behind the scenes. Some even consider Blackrock to be the most influential global financial institution, the world's largest shadow bank, and possibly the entity that effectively owns the world. However, his success came to a sudden halt when he lost a staggering $100 million for his company due to a missed call on his hand. The trades were wiped out, and the hedges meant to offset the losses were also obliterated. Fink's reputation plummeted, and he went from being a hero to a toxic asset, shunned by his colleagues. He was ultimately forced out of the company he had spent 12 years helping to generate around $1 billion in assets. But Larry Fink's resilience shone through. Rather than letting this catastrophe mark the end of his career, he used it as a driving force to ensure he would never find himself in a position where he didn't understand the risks involved. In 1988, at the age of 35, he co-founded the Blackstone Group with billionaire investor Stephen Schwarzman, starting with a $5 million line of credit. By 1993, they were managing a substantial $20 billion. However, a power struggle between Fink and Schwarzman led to a parting of ways, and Larry Fink founded Blackrock, channeling his pain and trauma into building the company at an astonishing rate. In 1999, Blackrock went public for $375 million, and by 2004, it merged with Merrill Lynch, adding $500 billion to its assets. Today, Blackrock manages an astonishing $9 trillion. While the sheer size of Blackrock is impressive, what truly sets them apart is their software platform, Aladdin. It's essentially a supercomputer network of 5,000 computers that Blackrock uses to monitor millions of trades and analyze their clients' portfolios around the clock, performing risk analysis and much more. Larry Fink's journey from the highs of Wall Street to a devastating financial loss and ultimately the creation of one of the world's most influential financial institutions, Blackrock, is a testament to his resilience, determination, and strategic genius. Through Aladdin, Blackrock manages not only the reported $9 trillion, but actually oversees approximately $21 trillion in assets, thanks to a third of Aladdin's 240 clients. This means that one company, Blackrock, keeps a watchful eye on the equivalent of at least 10% of all the stocks and bonds in the world. In 2008, the global financial crisis erupted and Wall Street turned to Washington for a bailout. Blackrock was the go-to firm to manage this crisis. They were entrusted with managing $30 billion in toxic assets from Bear Stearns, offering advice on how to distribute $100 billion of toxic assets from AIG, and dealing with the $301 billion of Citigroup's assets. All these transactions were conducted behind closed doors without competitive bidding. Larry Fink, who had once fussed ridicule in the world of finance, became the linchpin between Wall Street and Washington. The secrecy and massive scale of these contracts, coupled with BlackRock's enormous influence, raised eyebrows. Some likened BlackRock to the Blackwater of finance, drawing parallels to the infamous private military contractor during the War on Terror. On the surface, it may appear shady and corrupt, but considering the government's limited expertise in financial intricacies like mortgage-backed securities, it's somewhat understandable that they'd turn to an expert who played a pioneering role in these financial instruments. While it may not be devoid of corruption, there is an element of pragmatism in involving someone like Larry Fink. BlackRock has indeed made significant efforts to expand into more eco-friendly markets. They have introduced environmentally focused products, partnered with activist investors, and backed shareholder resolutions that encourage companies like ExxonMobil to take climate change seriously. Larry Fink even penned a letter to companies, emphasizing the need for them to contribute to society to receive support from his firm. This push for sustainable investing, often referred to as ESG, environmental, social, and governance, investing has had a profound impact on corporate behavior. Companies now prominently display their ESG scores on their investor relations pages, reflecting their commitment to environmental and social responsibility. G-scores have become a key factor influencing investor decisions. This trend has also prompted corporations to adopt a more woke image. They are quick to highlight their green initiatives and show support for movements like Pride Month. These efforts boost their ESG scores and make them more appealing to investors, particularly institutional investors and insurance companies, who are increasingly aligning their investments with higher ESG-rated companies. The main driving force behind Larry Fink's success is the painful humiliation he experienced after losing $100 million. This setback served as a catalyst for BlackRock's remarkable growth. He poured his heart and soul into the company, and many believe he remains as determined and focused as ever. On a personal level, Larry Fink values being perceived as a good human being, a caring individual who comes across as genuine and unpretentious. He takes pride in remaining true to his core principles, even after decades of success and influence in the world of finance. If you found this information helpful and would like to see more content like this, please consider liking and subscribing.